What's going on, guys? It's Investing Hustler here, and today I'm going to make a video requested by one of my members. So when I hit the 10,000 subscriber milestone, you guys were given the option to join my membership. As you guys can see right here, this little join button, you could click that and you could become my member. And pretty much what happens is I give you guys a few perks. You guys get loyalty badges, custom perks, and obviously you guys have a little bit of advantages over my non-members. You guys have the advantage on all my morning live streams. Whatever requests you guys have, your requests will always come first. And on top of that, you guys have the option to request a video for me to do. So one of the videos requested by my members was on Ford. So I'm going to do a video on Ford stock, and I'm going to talk about what I feel about this company. So shout out to all my members right here. I honestly forget who was the one that requested Ford, but I did write it down on my notes that Ford was requested. I also have another video requested, which I will get to. I think it was IJ that requested Ford. So either way, shout out to all my members. I know I only have 7 members right now, but either way, I just unlocked this feature at 10,000 subs. So if you guys want to join my membership, you guys are welcome to join. It's only $4.99 a month, so it's super cheap and it's very easy to do, and it's through YouTube. So let's go into Ford stock. We're going to take a look at them right now, and as you can see, I've drawn a few lines right here. We have a long-term support line right around $7. We've seen Ford hit the $7 support line about 1, 2, 3, 4. And now we're almost about to hit that for the 5th. This support line goes way back since 1993. That's why I'm calling it the long-term support. Right now, as you can see from these charts, Ford is currently downtrending. We do have a resistance line at around $18 right here, and we've seen Ford hit that one, almost two, three, four, 5 times. So we have a nice resistance line at around $18. We have a nice support at around $7. Just because we have a support line at $7 doesn't necessarily mean the moment we do hit that $7 support line, Ford will immediately bounce back up to that $8 resistance line. At any given point, it could break the support line and continue downtrending, and we've built an even lower support around here at $2, which last time it hit the $2 support line was in 2008 2009 crash. So if we do have a market crash, I wouldn't be surprised to see Ford go as low as $2. But yeah, as you can see right now, since 2013, Ford has been downtrending in between this support line and in between this resistance line, and we're about to hit the long-term support of $7. It's not guaranteed to go this low, and it's not guaranteed to bounce off this support line and then push forward after that. From what I'm seeing in these charts, it looks like Ford is going to hit this $7 support line. It'll be very interesting to see whether it breaks below it or whether it bounces back up. So it's not like Ford is just going to move according to these charts. News and results is what's going to push this company forward, or is going to be the reason why this company continues to decline. On paper, Ford looks like a very good company. Like, we're going to take a look at their valuations real soon, but first let's take a look at their technical analysis. Right now, in the last day, Ford is a buy, sell, and a strong sell. In the 1 minute, Ford is a buy, a strong buy. Look at the 1 month, it's a sell and a strong sell. Right now, we are near the bottom of the 52-week range. We do have more room for upside versus downside, but it doesn't necessarily mean that Ford's going to be pushing forward anytime soon. So let's look at them on paper. So there's a few things that I do like about Ford. They're still a profitable company. They have a PE ratio of 9.48. They have a dividend yield of 7.1%. That's a pretty good dividend payment. So that, to me, would be the most attractive thing about Ford, would be investing into it because of its dividend payments. And even on paper, they look really good. So we mentioned their price to earnings of 9.4, price to revenue of 0.2, price to sales 0.2, price to book 0.9. So when you look at Ford on paper, it looks like a value stock. But my concern is this a value trap? Because Ford can continue to decline. We're going to look at the pros and cons as to why you should or shouldn't invest into Ford. Another thing I do like about Ford is they have a total of $256 billion in total assets, and their market cap is at 33 billion. So that means that they have way more assets than the size of their market cap. So on paper, Ford looks really good, but when you look at these charts, it's kind of like catching a falling knife. Especially now, Ford is currently downtrending. So if you're looking to invest into Ford, hoping that it bounces back up, you do realize that right now momentum is pushing Ford down. Who knows? It might hit off the support line right here and start pushing forward, but nothing is ever guaranteed. So we're going to look at Ford right now. We're going to look at some charts. So look at the Ford company's worldwide vehicle sales from 2012 to 2018. When you look at the last 3 years, they've slowly been declining. So in 2016, they had 6,651,000 vehicles sold. And in 2016, they had 6,607,000. So it only dropped by about 50,000. And then in 2018, 5,982,000. So that's exactly what we don't want to see. We don't want to see Ford slowly decline in sales, which we have seen in the past 3 years. And even in 2015, they sold 6,635,000, and it's not like they've dramatically increased in sales from one year to another. So when you really look at it, from 2015 to 2018, Ford has dropped in sales, which is usually not a very good sign, because that shows that Ford is no longer growing, but they're actually decreasing in sales. Now we also have here Ford Motor Company's vehicle sales in Canada from February 2018 to February 2019, which we also did see a decrease from 18,501 to 18,250. But either way, that is a decrease in sales. Well, obviously, what we want to see would be a nice increase, because that would show that the company is growing. On top of that, there's even more negative news on Ford, because we're seeing headlines like Ford to slash jobs across Europe. So here you have Ford is cutting 5,000 jobs in Germany, with more cuts coming from the UK. So that's usually not a good sign. When a company is cutting jobs, it's usually a sign that the company can no longer afford to employ this many people. So they're trying to cut their costs, because their revenue is also decreasing, because their profits are also decreasing. So that's their way of cutting their losses, of cutting their costs. So that's usually not a good sign for a company when they're cutting 5,000 jobs. So there's a lot of pros and cons. We're going to look at the cons of investing into Ford. So the cons are Ford's earnings declined in each of the past 2 years and are expecting to slip again in 2018 and 2019. The most commonly cited risks for buying Ford stock include a belief that Ford's EV battery technology lags competitors like Tesla, and wariness of CEO Jim Hackett's announced strategy of slashing virtually all car models except for the Mustang, George says. Users also express lack of confidence in Hackett's background, since the bulk of his professional experience is in making furniture, George says. Another risk that's cited is the cyclical nature of auto sales, and the possibility that they're already near the peak levels. So here's the bottom line of Ford stock. With the Ford Series pickup truck Ford as a great cash cow and its big dividend, Ford should be an attractive investment, but the reality does not match the assessment. So Ford shows little sense of urgency in a changing automotive market and needs a strong dose of direction. Ford seems to be rudderless, says Leon, managing partner of CEO of LJPR Financial Advisor. Ford has indicated that it will remove their car lines and cut costs, but have yet to fully define their cost cutting. Ford sales are down, and for the first time since 2015, Fiat Chrysler has outsold Ford. There are a few pros to buying Ford stock. This isn't all negative. I'm not just going to bash. So Ford stock seems to be treading water right now, although there are some signs of demand. Among our users, Ford is the 22nd most popular stock, says Bernard George, Chief Executive Officer. A stock market data analyst firm, it's about 61% more popular than GM, but 60% less popular than Tesla. There's little to no interest in Ford from the short side. The most commonly cited reason for owning Ford are its low price earnings ratio of 5.5, coupled with the potential upside from its self-driving initiatives, George says. Press reports suggest Ford's self-driving cars are capable of navigating very complex urban environments, though there is some skepticism about the controlled nature of Ford's demos of the technology. He says users also know Ford's dividend yield is attractive, which, yes, I did mention that Ford's dividend of 7.1% is very attractive, but I think they're making up that dividend because they know that the company is slowly declining. So shareholders are losing value in their shares, but I guess they're trying to make up for that loss with the high dividend payment. But there's also some somewhat good news, which is Ford's CEO says a big surprise coming next year with electric vehicles. This is an article from January 13, 2019. So if they're talking about next year, they're going to have a big surprise with electric vehicles. That means that around 2020, around January, hopefully Ford has a line of electric vehicles, which might just save this company. So this is a key point. We have 16 models that are in design and development. We have a pretty big surprise coming next year, Ford CEO Jim Hackett says. Ford has previously announced its plans to invest $11 billion in electric vehicles by 2022 and produce 40 hybrid and fully electric cars. The company is also in the middle of a massive restructuring with an aim to slash costs by $14 billion over the next 5 years. So now to give my final conclusion on Ford stock, whether I think it's a buy, hold, or a sell, or whether I think it's a value stock or a value trap. But let's keep in mind this is strictly for educational and entertainment purposes, and I encourage everyone to do their own due diligence and invest at their own risk. So right now, I currently won't be buying Ford, and I'm currently not holding Ford. So I would consider Ford a sell, but we are reaching close to this support line right here, and I would be tempted to start a position with Ford, but I don't think I would be doing that unless I plan to diversify my portfolio. Maybe if Ford continues to raise their dividends, but I don't know how long they can continue to keep that up. So around these prices, I'm not really interested in Ford, but if they do go below $7, I would be tempted to start a position with Ford, but that's only if they go below $7. So right now, do I think Ford is a value stock or a value trap? But unfortunately, I'm going to have to say Ford right now is currently a value trap until they start proving themselves as a company. Maybe once their whole new line of electric vehicles comes out and they've proven that it's going to be successful and it's a company that's going to start making more sales year after year, maybe then I will consider Ford a value stock. But as of now, I do think it's a value trap, and it's been downtrending since 2014, 2013. So at this point, you are risking catching a falling knife. But once again, I could be 100% wrong. Make sure you invest at your own risk. And that's it for now, guys. Bye-bye. So here's an interview with the CEO. I'm going to leave the link of this interview in the description below. I'll probably play the first couple minutes. I did notice the sound quality is bad, but mostly because of the location that this interview was taking place. You hear a lot of cars and engines in the background. But either way, if you enjoyed this quick video on Ford, don't forget to give me a thumbs up. And if you're not subscribed yet, don't forget to hit that notification bell and smash that subscribe button. And don't forget to join my membership group if you guys want to request a video for me to do on a specific company.
How do you feel the restructuring is taking hold right now?
Well, and I was really clear that it was about its fitness. In fact, there's a Harvard Business article this quarter that talks about fitness is more than just cost reduction. It's about designing the company to be really competitive. So an example that has happened in that year, we took a Fusion that took over 80 days to be built, delivered to a customer, and we've been able to cut it to under 35 days. And that's through better design and information and IT and et cetera. And can you imagine the capital that's dropped because you don't have the working process in the factory of that one vehicle? So these things, there are 19 projects like that we kicked off a year ago that are all bearing fruit now.
They're bearing fruit, and yet you're not getting the credit from investors in Wall Street that I'm sure you feel you deserve. Why is there a disconnect? If you're doing the things you say you're doing, and it should be filtering through to the results that investors in Wall Street see, why is Wall Street not getting you credit?
In fact, it gets even more challenging when you understand something else, which is, to Alan Mulally's credit, we built a underbody in the best-selling product ever in history, the F-150, that would meet fuel standards in the future that are more onerous. We're the only company that has that future-proofing in. The cost of that was in the product early. We're more than happy with the way that's running through. We've put superchargers for fuel efficiency that you're not seeing in other vehicles. So a lot of what you're seeing in the margin-to-margin performance is because Ford's more future-ready in the design of the existing vehicles. With regard to fitness, I think they just want to believe that it's happened. So in the last...
You think the analysts want to believe that
they want to believe. In the last 30 days, they're starting to see our plans in Europe, which was something we'd hinted about. And common sense would say that a plan like that, that's as extensive as that, needs to be highly choreographed because you have really important constituents that you've got to have in sync. I challenge people that have never run an industrial company to understand the way you run that versus, say, a tech company, where you have a lot of these fixed assets and how you manage that. But I'm really happy that last year was about designing and thinking these ideas. This year is about them happening.
about executing. Part of
Executing.
that is we have a wave of vehicles that are coming out this year.
70,
Will certainly help the revenue and the bottom line as you're investing in further restructuring over the next year. Are those investments, when do they pay off in that restructuring?
well, that's an important insight that you would get covering the industry. Do you realize some of the pain in the margins additionally are because the vehicles were old? We had the average oldest fleet in the industry. We're going to have the average newest fleet. 75% of the portfolio is being turned over. So the Explorer is an example of that. This product's gone through 9 model years. It's had mid-cycle reviews, but this is the first time in 9 years it's been re-engineered and redesigned like you're seeing today.
What about with electric vehicles? Tesla clearly has shown there's demand in the market. General Motors is investing heavily there. When people look at Ford and electric vehicles, there are a lot of people who say, I'm not seeing enough. When do we see more?
Well, we've talked about a huge investment in electric vehicles. We have 16 models that are in design and development. We have a pretty big surprise coming next year. And we've actually inferred something more important. We said those early generations of EVs were like science projects, and they attacked a narrow segment of the market that had a good head about society and the performance environmentally. These are products that are going to appeal to car owners and car lovers, and they meet both of those other objectives.
Is the dividend safe at its current level?
If so is, we're sitting on over $23.5 billion in cash.
You don't need to cut it to save cash, but people are wondering with the investments you're making over the next several years.
Yeah, and we can follow those because what we've said to them is that the restructuring, and I tell our people inside the company, the cost of restructuring is because you didn't pay attention to fitness earlier. So we have a seminal moment where we can clean that up. We also have the prospective investments in the future. And we can weigh either the speed of those or whether we have partners in those, such that we never risk that balance sheet and in turn never risk the dividend.
Speaking of partnerships, where do things stand with Volkswagen in your discussions?
So we've been really active. From their camp, you hear they've been talking to the supervisory board. There's a lot.
Anyways, that's it for now. I'll leave the link in the description for you guys if you want to check out the full interview. As you can see, he seems very confident in his company. He's talking about electric vehicles coming up. He did mention that the dividend payment is safe. I'm not 100% sure if that's the truth, because for them to keep up the 7% dividends and still be investing that much into company, I feel like they're going to have to give up one or the other. And I feel like eventually we might see that 7% dividend drop, but I could be 100% wrong. Let me know what you guys think about Ford Motors, whether you guys think it's a buy, a sell, a hold, a value trap, or a value stock.